evening.
Like we are conversing, but
Okay.
Yes, I think that's better.
Okay. Good evening and welcome to the 14th edition of the Financial Education, a lifelong learning program brought to you by Finance Literacy Improvement Program. This evening, I have a panel comprising of two distinguished, proven financial professionals, highly regarded and respected globally. The topic for discussion is budgeting in the fast-changing economic times. And to split the atom, to count the numbers, to bring information and knowledge to your business, to your family, and none other than Dr. Charles Barugahare, a founder and president of Finance Literacy Improvement Program, a former accounting officer and university secretary at Makerere University. He has also been on several boards and also chair of audit risk and compliance committee in a number of boards in both public and private. A author of several books, one of which is Navigating the Financial Path, a 30-day as a stepped improvement. And Dr. Charles has won several awards internationally, nationally, and regionally. Next to Dr. Charles Barugahare is Lilian
Katiso.
Lilian is the managing director for Zadok Associates, a financial and training entity. She is also the CEO of More and More and a CFO on call. She's a fellow of the Association of Chartered Certified Accountants, a member of the Institute of Certified Public Accountants of Uganda, an holder of MBA and BCom accounting. Lilian, you're most welcome.
Thank you for having me.
For those who are joining us today, is the 14th edition of Financial Education, budgeting in the fast-changing times. And we need to start with the icebreaker. One question, icebreaker to all of you. When did you first hear the word budget, and from whom? Lilian.
Thank you for inviting me once again. My name is Lilian Katiso. So I remember when I was just going to high school and I needed to do shopping to go to school. And so my dad told me to write a list of the things that I needed for school. And so I wrote, like as if a wish list. And of course he crossed a few things here and there. And then said, okay, now we go shopping with that. So I believe that was my first experience of a budget. And what I noticed is that anything that was not in the list, if I forgot it, then I forgot it. So we went by the list, and that became the shopping list, which I believe was my first introduction to budgeting. Yeah.
Thank you. Dr. Charles.
Thank you so much. Very interesting. I think I had it from my late mom, and she used to have 3 bags. One to put money related to day, one to put money related to school fees, and one to put money related to the tithe. And she said, if I am to do something related to one of them, I will pick money from that one. That's when later when I grew up, I understood, well, that was the budget.
That's what they call the envelope system.
Yes.
Nice.
Yes, wonderful, wonderful. Ladies and gentlemen, those just joining us, welcome to the 14th edition. And today's topic is budgeting in the fast changing economic times. Just a week ago, we have witnessed the regional governments, East African community, reading their budgets for the next financial year. It has been a discussion, a debate on government priorities going forward, funding the budget and challenges and the key areas of focus. So today's topic is coming at the time when this is an ongoing conversation. We know in the audience, we normally have regulators, chief executive officers, board members, investors, people in private and public sector. So in the next 55 minutes, we are going to have constructive conversation with you. We shall also pick your questions. But now, to set the ball rolling, I need to get back to Dr. Charles Barugahare, and please split the beans. What is budgeting?
Wow. Thank you so much. In April last year, at the Rotary District Conference, where I launched my book, Navigating the Financial Path, the 30-day Personal Finance Improvement Challenge, a Rotarian from Tanzania said this, and it stayed with me. He said that the day he realized and appreciated where his money was going is the day he started to change his life. That's when I realized he was talking about the budget. So a budget is a financial plan to organize how you earn, how you spend, how you invest, and how you protect money, in simple terms.
Great. Lilian, we take from there.
What is a budget?
What is a budget?
I like the quote by John Maxwell, though some people attribute it to Dave Ramsey, when he says a budget is telling your money where to go instead of wondering where did it all go. So I think it's being deliberate in directing your finances, assigning tasks to your money instead of just finding your money disappearing from your purse, from your wallet, from your bank account. And I think many times we think a budget is something really complex. But I think the fact that you're in charge of your money, directing it on where to go, that is budgeting. Directing the resources to come into you, your purse, or whatever your account is, and directing how the resources go out and get distributed I think that is a simpler way of saying what a budget is.
Good. Thank you, Lilian. Charles, in the audience, we have people in informal sector, small, medium enterprise, medium, large. What are the importance that you can attach to a budget?
Thank you so much. The budget is very, very important. And I will use just 3-letter acronym to describe the importance of a budget to an ordinary person. And that letter is KPC. Not the Pentecostal one. I'm not talking about the Pentecostal one. I am talking of K being know where your money is derived from and where your money goes. That's the first K. Know where your money is derived from and where your money goes. It's very important because if you don't know your past, how your paycheck looks like and how it is comprised of, then it is very hard to use it well on the other side of spending. And that becomes the number one reason to budget. The second reason, which is P, is prioritize. That you need to prioritize your money. There are many things that your money can do, and therefore you have to sort the few that your money should be able to do. Now, there is a simple acronym to help you sort also what your money should do, and it is called the CDF. Please don't look at the CDF as the Chief of Defense Forces. C stands for choice, that you have to make serious choices around your money. And select from many and choose from them. That's choice. D is that you have to make a decision. Now that you have selected that I am going to pay attention to these, then go ahead and implement them according to how you have decided that I'm going to focus on these ones in this period. And finally, F is focus. Now, we are here, the cameras are focused on us. The same way, if you focus your money to certain important things, then the attention goes to what matters most in regards to your money. Now, the last one is the C, as the other part of KPC, which is paying attention to control and be in charge of your money. You cannot be in charge of your money unless you are actually doing budgeting and knowing what comes in and knowing what comes out, and therefore be in control. In simple terms, that's what I could describe as the importance of budgeting.
Thank you, Charles, for the illustration. Lilian, I know you are also the CFO on call, and I know you engage chief executive officers a lot in supporting them. Why do we overspend, and how should we overstop it?
Okay, so why do we overspend? Mostly is because we think mostly when we get an increase, then you feel like, oh, okay, now even your appetite for spending also goes up. But I think as we said earlier, is if you have a direction for where your money should go, then you plan for it. But most of the time we overspend because you don't have a plan for the money in the first place, yeah? So you think because your paycheck has increased or you've just got a job, then you get excited and just go on a spending spree. So most of the time we overspend because we don't have direction, we don't have a budget, We don't have priorities, as Doctor has said, and we sometimes are over-optimistic about the future. You think because now you have a good job, it will be there forever. And so what happens is that you say, okay, I know I'm going to get a salary at the end of the month. I spend in faith that the money is going to come at the end of the month, and you make promises and you pay. For a big part of my life, I was an accountant, and I've been in the accountancy profession for 25 years now. But the earlier part, when I was in the accounting department and processing payrolls, I realized that people will come for salary advance, all sorts of advances. By the time now the payday comes, they've hardly had anything to take home. We had to put a policy that whatever advance you're taking, you have to have a certain percentage that you can still take home. But you still find someone has got their salary at the end of the month, but because they had taken a lot of things on credit earlier with the anticipation that the salary is going to come, the salary comes and it gets finished in the next couple of days at the end of the month, just clearing things that they're really committed. So I think we overspend because we don't have a plan, we don't have directions, but also we are just too optimistic about the funds that are flowing in.
Thank you. Thank you, Lilian. And welcome those just joining us, our virtual audience, to the 14th edition Financial Education. Today's topic is budgeting in the fast changing economic times. And with us this evening, we have Lilian and Charles. They are breaking the beans, splitting the atom, and make the numbers work for us. Charles, today, as I was preparing for this session, I met a lady, she's a vendor, and I said, what do you expect from this evening's webinar? And our point was she wanted to understand how to achieve a well-planned budget. What are the key considerations?
Thank you so much. I don't know whether the vendor is also online, but
Yes.
It's okay. It is a welcome question. I would focus my attention on the 3 P's of budgeting. And the first P is the paycheck. And the paycheck, basically, you are focusing your attention on where your money is derived from. It can be from business, it can be from salary, it can be a gift, it can be a donation, it can be an allowance. So that's the first P, to appreciate and understand your sources of financing. Now, because of the different sources of financing, the way we spend them tend to align with the various types of sources. For instance, if it is salary, you are sure that at the end of the month you are going to have another pay. And therefore the way you spend is different from a business person who knows he has gotten this money and may take him or her another 3 months before he gets that kind of pay. And therefore there is a difference between how that person will spend. When you get a gift, for example, inheritance, the way you spend that money will differ from one who has gone to work and earned that money. And therefore, we need to pay attention to that first P, the paycheck, the way we earn and treat our money equally. The second P is priorities. I've already a little alluded to the power of priorities, the ability to make a choice. Everybody is targeting your money. The issue is, are you willing to give all your money to all the people that are targeting your money? If you do, then all your money will go and you remain with nothing. And therefore, you have to have choices. Then you have to make decisions around those choices. And finally, you have to focus your attention to the most critical around your financial life that can support your goals, that can support your life, that can enable you to grow. And the third P is plan. You must plan for your money. And in the plan, there is an acronym called PAM. PAM means prepare. Prepare how you are going to spend your money. What am I going to spend this month and on what? What am I going to spend next month and on what? What am I going to delay for next month so that in April, when I know I have fees, I'm able to manage and pay fees so that you don't reach April and you are like, I don't have money for fees. So prepare. The other is act. Now that you have prepared, if you prepare and you don't act, then it will be wasted. So if you have said, I'm going to put aside this kind of money towards something, try and act and implement it. If you say, this month I am always eating chicken out twice, try and eat chicken twice. Don't get excited and you go there 3-4 times and then you cause a shortage. So act. And finally, after acting, monitor. Monitor that what you prepared, what you acted on, you can then compare and check, how am I doing? And therefore then you are able to take corrective action and make changes in your life. I thank you.
Thank you. 20 minutes into the hour. For those just joining us, welcome to the 14th edition of Financial Education, Budgeting in the Fast Changing Economic Times. Lilian, financial stability. It came so out clear. How can one achieve financial stability with a budget?
Okay. I think it goes back to the point that is mentioned about planning. When you know where you want to go, I like the quote by Stephen Covey. It says, begin with the end in mind. Okay? So where do you see yourself in the next 5 years, in the next 10 years? So when you have your long-term plan, then it means you work according to that and then achieve financial stability. Because without a plan, even if you save and you had no plan, something comes up and then all that money goes somewhere else. I remember some years ago, I wanted to leave employment to go into financial consultancy. And from my research, I knew that going into consultancy, there was no guaranteed monthly paycheck. And from my research, I realized I need at least 6 months worth of my living expenses for me to be comfortable in going to consult. I mean, financial literacy, we advise 3 months worth of your living expenses. But now going into consultancy, because you have some good months and some seasons that are not so good, I knew I needed about 6 months worth of my living expenses to ensure stability. And so I sat down and thought, okay, so what's my game plan for this? At that time, I was still not good at saving. And so I became deliberate to know, okay, fine, if I want to achieve 6 months worth of my living expense, to go into consultancy. So my plan was to go into consultancy. To be able to go into consultancy, my queue to be ready to go into consultancy was to have 6 months worth of my living expense. So the question is, how much is 6 months worth of my living expense? Which goes back to tracking. So you have to know your numbers. What are you tracking? How much you spend on food, how much you spend on rent, how much you spend on transport, on everything that goes about running your life. So you have to know how much you spend on a monthly basis so that when you multiply by 6, it gives you a target. And so when I did my exercise, I found what my target was, and I was like, okay, fine. If I want to go into consultancy in the next 5 years by that timeline, I said, okay, fine, I need to start saving at least, if I save at least 10% of my salary on a monthly basis, I'll be able to achieve this. But when I started out, of course, it was not easy. But what we did at my workplace then, we formed a group, circle, and we encouraged everyone to save some money. And so we started saving some money. So the idea was to have discipline of saving some small money. It was actually 20,000, 50,000, like that. So we started saving some money, and it reached a point where I reached 5% of my gross salary, and I plateaued because I was like, this saving thing, I don't think I'm going to reach there, the 10% target. And I had a conversation with myself, and I figured, you know what, my employer is already taking 5%, putting in NSSF, so maybe if I do my 5%, it's still okay, you know, it's contributing. But God was faithful that in that time, I got a change in job, and so I got a job with an international NGO, and because they were paying so well, I realized even if I saved 10% of my gross, I was still able to comfortably live within that amount of money. But also, what helped me was that when I got this better job, I did not go and change house and change car, because normally that's what happens. You get a bigger job, you get a bigger car, a bigger house, and bigger everything. But because I already had a plan, I was able to plug into that plan. I think if I didn't have the plan and a target, I would have just expanded everything as we all do. Anyway, so I started this saving 10%, but also depends on where you save it. And I was using unit trusts, so they are not easy for me to get the money if I want to get it, but also the money was getting interest. So I did that for about a couple of years, and it so happened that one time I go into this office for this well-paying job, and my boss gives me a letter and say, your contract is coming to an end. Okay, my contract was still 5 years. I mean, it was a 5-year contract, so this was the 3rd year into the 5-year contract. And so I had 3 months notice for the job to end. And I was like, okay, if my job is coming to an end now, it means then this is the time to go into financial consultancy. I mean, into consultancy world. And I sat there thinking, am I ready to go into consultancy? And I went back to my plan and I said, okay, my queue for getting ready for consultancy was 6 months worth of my living expenses. So what I did, I was using UAP Financial Services then. They send you a statement on a monthly basis. So I went into, I remember it was April. I went into, it was April 2016, still remember very well. So I went and got my statement for that month, and I was pleasantly surprised that I'd saved more than 6 months worth of my living expenses. But remember, it was not something that started then. It is something that started 5 years before. It started by saving, but before saving, it started by recording the expenses. And when I was recording the expenses, maybe because I'm an accountant, I would analyze every month how much I would spend on the different things. And after a couple of years, I was able to see, oh, do I really want to spend that much on food? Do I really want to spend that much on entertainment? And so I developed caps, so to speak. My cap for entertainment, my cap is like the upper limit for entertainment, for all those different things. And that gave me the discipline to keep on saving, the discipline to keep on investing. And so by the time my job came to an end, actually, I was ready to leave. And my boss at that time was an expatriate. And we got the letter the same day, and he was very ruffled. And he asked me, how come you're not ruffled? Both of us are losing our jobs, you know? And one thing is my faith in God. And I couldn't tell him it's because of my faith in God. I believe God gave me that job, so he can give me another job, another source of income. But I could not tell him that because he was an atheist. Whenever I have staff meetings, he say, me, I don't pray, I'm an atheist. So I couldn't tell him about my faith in God. But the second thing that kept me calm was because of this thing, that I'd saved 6 months worth of my living expense, so that if in the next 6 months I've not got any consultancy work going, I can still survive, I can still live, I can still go on. It's a long way to answer your question about financial stability, but I'm just saying financial stability is not reached overnight. It is a discipline that you develop over time. When I was going through that journey of that target, I was disciplined in having, what is that called, a paper to go to the supermarket to buy things. And over time, I will know, okay, these are the things I buy on a monthly basis, so I don't overindulge. This is my budget on a monthly basis, so I don't overindulge. And after doing that for 5 years, I don't even have to have a physical budget written. It's like it gets ingrained in your head. And so that becomes a disciplined life that you live with and gives you some sort of stability. It's a long way to answer that, but I'm just saying there are many components that give you financial stability. But also apart from that is having other skills that give you revenue streams more than one. Remember, I had a job that is coming to an end. But before this job came to an end, I had started, as we call it, side hustling. My consultancy skills, I started doing some consultancy work over the weekend. And so that was giving me some revenues. And also my hobby for gardening, I started selling plants from home over the weekend. And so that was giving me some other revenues. So as much as my job was coming to an end, one, I had the buffer for 6 months. But another thing, I knew that I already started building a pipeline for clients to consult. There were not so many, but at least they will not keep me idle. But the other important thing is that I turned my hobby into a business. And so my job and my last day of work was 31st of July 2016. And 1st of August 2016, I opened my first outlet for Maua and More. Yeah, because I was scared of staying at home. By God's grace, I've never stayed at home from campus. I got a job immediately. So I was like, this is not the time I'm going to start staying at home. So I said, okay, let me have this shop. If I don't have consultancy work, because consultancy work is not every day you wake up and it's a job for you to do. I hadn't created a pipeline. So I knew I can still be there to work on my business as I wait for consultancy pipeline to happen. So the point I'm saying is, for you to have financial stability, you have the discipline of budgeting, tracking your finances, investing, but also having more than one source of income. Because in case one stream dries up, you still have something else. There's a story someone saying is, you look at your finances like a table with four legs. So if one leg breaks, the table will not fall. It will not be very steady, but at least you can still place a couple of things there. But if it had only one, it falls, it's gone. So I think having multiple revenue streams is one of the things that helps you to have a better, a stable financial budget and also a financial life. Thank you.
Thank you very much, Lilian. And the conversation is getting constructive. This is the time for engagement. Ladies and gentlemen, those just joining us, welcome to the 14th edition of Financial Education, Budgeting in the Fast Changing Economic Times. Feel free in the chat room to send your questions, your comments, your contribution. It is getting better, Dr. Charles. Practical, relevant examples where applicable, we are hearing them. What are the challenges budgeting and how can we overcome them?
Okay, thank you so much. Before I go to the challenges, when Lilian was speaking, I reflected on one important aspect, which was the aspect of making sure that you don't have your eggs in one basket. Yeah. It's an old saying, but I think we rarely pay attention to it. And therefore, one main reason that will drive us to start to see that we need more than one source of income is budgeting. Yeah. And unless you start to see that I don't have money for this, don't have money for this, I don't have money for this, the brain will not start to think in looking for options. And therefore, I want to pose a question here. First of all, to all of you here. How many of you are making budgets? And to those in the audience, how many of you have budgets? Just type, if you have a budget, type in the chat room and say, yes, I have a budget. Don't answer it now. Challenges and ways to get out of budgeting. Now, the biggest challenge with budgeting is it promotes what is called use it or lose it practice. Today is 25th of June, yeah, and it is towards the end of the financial year. The attendance may be low because people are working very hard day and night to make sure the money is spent before 30th of June. Or else that money will go back to the consolidated fund. And the same applies to us individuals. When you make a budget and you are saying, I have 200,000 for my evening out with friends for a month. If it is 28th and you have spent 100,000 and there is 100,000 you have not spent, you are itching. I need to call my friends and spend it. That practice of use it or lose it tends to affect us. That's the first challenge with budgeting. The second is that there is a tendency that we budget from historical perspective. Within the audience, there is a gentleman who is a timber trader. And in 2022, he exported 50 tons of timber. In 2023, he exported 80 tons of timber. He projected to export 100 tons in 2024. Guess what? He exported 0.
What happened?
And the reason was change of government policy, no exportation of raw timber. So that's the biggest challenge also around budgeting, that we tend to use historical perspective and therefore cannot project the future better. So that is the second. The other is that the budget tends to be restrictive in terms of innovation. Once you have said, these are the things I'm going to focus on, it becomes hard for you to start looking outside to do things that can change and that you can do outside the budget that can prepare you. So the recommendations I make here are around 2. Number 1 is that we need to move into building flexible budgeting, whereby keep changing your budget as you go along, provided it is in line with making your life better. If you had said that I'm going to be saving 100,000 and you realize you can save 150, or you say I'm holding on to 100,000 that I had planned in January to save until December. But if also things become very hard and you cannot save 100,000, save 80. If things become harder, save 70. If things become harder, save 50. Like Martin King Jr. once said, if you cannot fly, then run. If you cannot run, then walk. If you cannot walk, then crawl. But keep moving on your targets, on your budget. That makes the budget flexible. The second thing that I would pay attention to would be that you build scenarios around your budgets. Have the best case scenario. If all things are according to my plan, this is how I would deal with my money. This is the normal way. This is the bad way. So that when there are changes, you have easier decisions to make around your money. That's briefly what I can say to that question.
Wonderful. Getting very structured, informative. For those just joining us, welcome to the 14th Financial Education, Budgeting in the Fast Changing Times. And we have 2 panelists, Lilian and Charles. We are now getting into the second phase of our conversation. Fast changing times. And all of you are proven, established, highly regarded and recognized globally. So the question is going to attract response from both of you. Fast changing times. We have seen increased regulations, scrutiny, stakeholders' expectations, and emerging risk. Let's start with stakeholders' expectations. In these fast changing times, economic times, how do we meet stakeholders' expectations? Anyone can start.
Which stakeholders?
That's the question. Which stakeholders?
In our audience, we have diverse stakeholders, so feel free, provide relevant practical examples where appropriate, but you are free to choose a stakeholder of your choice, industry of your choice.
Okay. So when you're talking about budgeting or finance, they're normally either personal or business.
Yes.
So which means the stakeholders for both are all different. Yeah?
Yes.
So for a person who is fully employed, your stakeholder, I'm also sure, a key one that will be affected with the fast changing times. I think maybe the one that has more dynamism would be for a business person. Me being a business person, maybe I can speak to that. So you find there are different regulations that are coming up and all those different things. So as a business owner, how do you remain compliant? So you have URA, now they have target, URA, Uganda Revenue Authority, they have targets for end of year, and so they are calling people left, right, and center. You pay this obligation, reminding you of this obligation. So how are you as a business owner up to date with your tax obligations? Of course, NSSF also is calling. Previously, NSSF, if you're a business owner, you have to have at least 5 employees for you to register for NSSF. Now they brought the bar down to as long as you have an employee, you have to register for NSSF. So are you still meeting those obligations? And of course, they are closing their books soon, so they have to make sure that you have taken in your contributions as a business owner. But of course, you have the Uganda Registration Services Bureau. If you're a limited company or even a business, you have to file your returns. You have to file your annual returns on the composition of your business. And of course, you have KCCA still, Kampala Capital City Authority. If you haven't renewed your trading license, have you renewed your trading license? Are you paying your local service tax? I mean, the list of stakeholders are quite many. So I think as a business owner is to find out which are the ones that apply to your business. There's someone who called me, was it this morning or yesterday? And they're saying they're going to a business of tourism. And they're asking me, okay, so how do I comply with the taxes and everything? I said, okay, in tourism, the taxes that apply for you in tourism would be different from the taxes applying for me in consultancy and in my gardening business. And so you have to acquaint yourself which taxes, which stakeholders are in your business, so that are you adhering to their requirements, to their regulations, and making sure that you're complying. There could be some permits that you might need to have. I mean, the stakeholders are as varied as the number of businesses that we have. So I think as a business owner, just know who your key stakeholders are. I mean, if you're in the accounting profession and you're an auditing firm, okay, are you right with the institute, whatever requirements are there? So I think the stakeholders are diverse, but as a business owner, you have to know who are your key stakeholders, mark them down, and make sure that you have a checklist of compliance with each of them.
Wonderful. Charles?
Okay. My perspective would be slightly different.
Okay.
I want to look at it from the angle of the things that are happening around us. I didn't know that President Trump would be my closest stakeholder in the short period. But it happened so fast that my friends, My people in the network were affected by the actions of President Trump. That therefore means that stakeholders, like you said, are very, very diverse. The events that are happening in the Middle East, we need to pay attention to them because they are stakeholders.
Yes.
We are likely to have effects around fuel. We are likely to have effects around travel, around the world, the distances that we'll be taking through Middle East to China, whatever will all be diverted, and indirectly they will become our key stakeholders in terms of A, this is something to pay attention to, this is something to look at, this is something to get closer to. In one of my coaching sessions, I asked a lady, how much do you earn? She said 5 million. I said, net or gross? She said, what do you mean? To cut the story short, by the time we concluded the matter, she was earning a net of around 3. But she had told her friends, her family, that she was earning 5 million. And the expectations were much higher because you earn more money, and therefore you should be doing many things at home. And therefore, to her, the stakeholders were also very different. And therefore, the aspect of stakeholder becomes a bit broad. Thank you so much.
Thank you very much, Charles and Lilian. Those just joining us, welcome to the 14th edition of the Financial Education, Budgeting in the Fast Changing Economic Times with Lilian and Charles. Lilian, emerging risk. With budgeting in a
emerging risks. So assuming, anyway, it depends. Let me focus from the individual side. So most of the people who are employed, they budget based on their salary. And so maybe you have an employment contract and you're thinking, oh, okay, so I'm still in this employment for the next couple of years, and you project your life like that. But then you wake up and they have reduced people. I mean, the Trump story, there are many around that time when USAID was scaled down, many people were affected. So imagine all of a sudden, your lifestyle was different. Your budget has just been disorganized completely. So I think the different policies from America that is affecting other people at the end of the world, affecting people's salaries. Apart from that, there is now AI. So many people are now scaling down on their personnel and deploying AI. I think recently they were saying Microsoft had laid about, I don't know how many thousands of people in May, and now they are going to lay another 8,000 or so people by the end of July. All those are people who are losing their jobs. So what's happening is the job security is your job security is at risk, and so that becomes an emerging challenge that we have to grapple with. And it's not even just starting now; it started slowly. When trends change, for example, when the banking halls now changed and started having agent banking, so many bankers lost their jobs. So I think whatever profession we are in as individuals, you have to project and see, you have to be aware what is happening around my job. As an accountant, what has changed? I mean, I remember when I started accounting many years ago, this is my 26th year, we used to have books. I think the accountant desks were having the biggest desks. Why? Because you had like a big book to do double entry. You enter the transaction here, enter it there. Then of course came the accounting software, and now your desk became smaller. But also what happened is they also trimmed down on the staff because now they needed fewer people. I remember my first job after campus, there was still, it's interesting that there's always economic crisis or economic whatever. And so my boss, they were scaling down, And so it was either me, the accountant, to learn to do some secretarial work, or the secretary to learn to do some accounting work. Now, for the secretary to learn to do some accounting work was a bit not so easy. But me, the accountant, I was willing to learn to do some secretarial work. The only challenge was I knew how to use a computer, Windows and everything. Now, my boss, being a British Indian, very specific in what he wanted, the secretary had to type the letters in it was called a what? A typewriter. A typewriter, and print them in the typewriter machine, because there's a way the letters will look different from what you print from the computer. It's like, I don't like these things you people print from your computer. So now, learning how to use a typewriter, it was looking like it was a challenging thing to do. But good enough, there was something called, I can't remember what it was called. There's something that was an interface between the computer and the typewriter. For some reason, the name has disappeared from my head right now. Something processor, I can't remember it. But you type like using your computer, but the printout comes from there. I had to learn a skill, and I think that's what we have to do now with the changing world. Things keep on changing. So the secretary lost her job. I retained my job, but with extended duties. As much as she lost her job, I actually got a salary increase because I was doing more work. Right now, what I'm saying is things are changing. AI is replacing a lot of things. But in your profession, what are you learning? Which skill are you learning to keep you still in the profession? So there's a threat of you losing your job because you're being replaced by a bot or some sort of AI, but there's an opportunity of you learning a new skill that can make you to do something that you would not have done earlier. I mean, most of us at 12 years old, how many people earn money at the age of 12? Very few people earn money at the age of 12. But the other day I was making my son to do for me some, edit my videos and do thumbnails at a fee. My son, 12 years old, he's actually earning money from editing my videos and doing my thumbnails. And why is it easy for that? Because he could just train himself and start doing it. So there's lots of opportunities, as much as there are changes, but there's lots of opportunities for us to take that we can actually work from home, save on transport to go to work, have skills that you can actually export just from home. You don't have to go to an employer on Kampala Road or Kampala, wherever, to work. From your home, you can actually service a client outside the continent, not just within the continent. So I think there are opportunities, depending on how you look at them. Do you take advantage of them and move on? I have seen accounting moving from the paper to QuickBooks desktop. Now people are actually doing it from their phones, the cloud systems. I think opportunities are there. As much as there are losses, we can position ourselves for the emerging trends positively.
Dr. Charles,
Yes.
emerging risk.
Okay. I think one of the things that will continue to happen around us is that changes will continue to happen.
Yep.
And therefore, anybody who does not expect changes to happen will be left behind. And for me, the number one emerging risk is that we are not learning fast enough to cope with the speed of change. And anyone who does not run at the speed of change will find himself running, but many people are actually overtaking him or her. And for me, to our listeners, to our viewers, we must spend some time to improve ourselves in terms of knowledge, in terms of our awareness. That's the only way we can start to compete, but also to be alert of the emerging risks that are happening to us. Because overnight they are going to change a policy, and for you, you're going to implement based on the previous policy, and you will be hit hard. So if you are not up to date with current information, you are not up to date with the global things that are happening, you will make your order and your ship will stay somewhere because of what is happening in the Middle East, and you will lose out. So I challenge you to pay attention to building your capacity to change and respond faster. For me, that is the biggest risk that mankind is exposed to right now. Because, like Tony Robbins once said, that if you cannot change quickly, changes will happen around you when you are not aware, and you will be lost and left behind. I thank you.
Thank you. We are left with only 4 minutes. And in these 4 minutes, we have received a question from an audience, and he's saying budgeting makes him have sleepless nights. In just 1 second, how can this sleepless night turns into comfortable nights? 1 second.
Okay, thank you so much. I don't think it will be able to answer in 1 second. But there are myths around budgeting that we need to dispel. That budgeting is so complicated, that budgeting is for people who have enough money, that budgeting restricts you from using your money well. To the contrary, budgeting is easier. Budgeting allows you to use your money well, but when you are aware. Now, for you, you may want to use your money when you are not seeing where your money is going, and by the time you see, you realize you are in a deep ditch. That is not what we want. We want actually to see you moving in the direction where you know where your money is going, but also realize that I think the money I earn may not be enough. What are the options to make me start to earn more so that I can position myself to be able to move forward better? For me, that's what I look at.
Lilian, in 30 seconds.
The same question?
Same question.
I think budget actually gives you freedom. Yeah. Why does it give you freedom? Because, so let's say you have a budget. You budget for your rent, for your utilities, everything. If you paid your rent and you have money for your entertainment, you go entertained without feeling guilty because everything else is sorted. So I think a budget gives you an idea, as I said previously, telling your money where to go instead of wondering where it went. And also still, when you have a budget, you have visibility of the different priorities, as you mentioned. So it means that if something happens, you can check within your budget lines and say, okay, what can I change this month so that I can compensate for this thing that has come? Because if I got an eventuality and maybe I didn't have emergency fund, God forbid, I say, okay, fine, maybe let me reduce my clothing budget for this month, my salon budget for this month to meet this obligation. But if you didn't have a budget in the first place, you might end up taking your money for school fees for that emergency. But when you have a budget, it means you know the lines that are available for you to spend on and where to bring the flexibility. What can I flex to manage this current situation and make up the next time? So I think budget buys you freedom to do what you want to do with your money without getting surprised.
So as we come to the end of the session, very interesting, very informative. Lilian, your parting shot.
My parting shot, I think most of the time we look at the budget on the expenditure side. That, okay, I don't have enough money to spend. Why don't we look also on the income side? If the thing, my expenditures, I don't have enough money, how then can I make more money to spend? As I don't know whether it is Robert Kiyosaki who says, okay, instead of thinking I cannot afford it, you should think, how can I afford it? Because that frees up your mind to be creative, to be solution-oriented, to think of new ideas. Yeah? Okay, fine, I need to buy this particular thing. What can I do beyond my current revenue to generate that revenue to meet that particular obligation? So let's not look as a budget as a prison that we can be in, but budget as a challenge that makes us to think, be more creative and be more resourceful to increase our revenue streams.
Charles,
yes.
1 second.
Wow. I think it was Ido Koen Khan who said that when money realizes that it is in good hands, it wants to stay and multiply in those hands. And the one way that you can know that money is in good hands is through budgeting. And therefore, I call upon you. I have not looked at the statistics of those who said yes. but I know I'm told that it is only one who said yes. It means all the people in the audience either did not participate or they actually do not have budgets. And therefore, when you get to know where your money comes from and goes, it starts to be in good hands. So the reason we have these awarenesses is to make sure that we can start to move in the direction where we start to take control of our money. And every step that you take leads you to a better you, financially, but also in the other fields of life. I thank you.
Thank you very much, our distinguished panelists, Lilian and Charles. We have come to the end of the session, and congratulations all of you for joining us and being part of this constructive engagement. God bless you all.